Good afternoon. Welcome to Money Tips. This is Charles Kelly. Today I've got a very special guest called Marc Adams, who's the CEO of Acquisitions for You and the author of Secrets to 10x in Your Business and Cashing Out Tax-free. Tax-free as well. Okay, well, that's great, Marc. Well, welcome to the podcast. Great to see you.
Hey, Charles, thank you very much for having me. It's a pleasure to be here. And everybody
Great.
loves that tax-free bit for sure.
Yeah, I'll have to ask you about that. But we had a brief chat, and you're in England now, but you spend a lot of time in America, and you've done a lot of work in America, so you go back and forth, I believe. You know, you've got a lot of work going on in America at the moment.
Yeah, kind of 50-50 with
Okay.
my time in terms of where I'm spending it between the UK and the US. Um, and Families here, grew up here. Obviously, you can tell from the accent, I am British.
Yeah.
I have lived and worked in America for some of my life as well. And there are lots of things I like about the States. There's lots of things that I like about the UK. There's lots of things I don't like about the States. And, like everybody else, but lucky enough to be in that privileged position to hop between the two, especially with, mergers and acquisitions and secrets to 10x in your business and cashing out.
Okay. So tell me, what does it mean by mergers and acquisitions? What do you actually mean by that? What does that typically involve?
So a lot of people think of it in terms of, or come across it in terms of the bigger
Yeah.
organizations that do
That's,
it.
yeah.
So, the Apples of this world buying other companies, Googles, the Teslas, the Amazons, and so on and so forth. But actually, most businesses are not of that size.
No.
And so and for business owners, especially those that are retiring, which I think about and work with a lot, they probably, for whatever reason, started a company 5 years ago, 10 years ago, 30 years ago, 50 years ago, and it's a privately held business. In other words, it's not
Mm.
on the London Exchange, it's not on the Nasdaq or anything like that. And they've built a really strong brand reputation, strong business over a number of years. And reflective of their life's work in many cases, with blood, sweat, years and tears that have gone into it to serve their communities with whatever it is, or their customer bases with whatever it is that they do.
Mm.
So a couple of things are absolutely certain in that scenario. At some point, that business that's, for this conversation, let's call a small and medium-sized enterprise an SME, a company that does less than 50 million pounds or dollars in revenue a year. We're not talking about profit here, we're just talking about the revenue. Some people would say an SME is bigger than that, and some people would also say that it's a lot smaller. It might, for some people, only go up to about 20 million. But for our chat, let's keep it around that sort of that mark. So two things will be certain. At some point, the people that run the company, if they founded the company, will sell it on or pass it into the business because they'll retire or sadly, eventually, every one of us passes to the next life.
Mm.
So you know that that business is going to do something at some point. So we've got all these baby boomers now who are coming into or are already in, God, try saying that when you've had a pint, retirement.
Yeah.
And they've reached a point where they're ready to sell their business. Now, it's not necessarily the case that they're going to pass it into the family because it's not the latest Instagram or cannabis resin oil business or whatever the flavor du jour is right now. So it's not always the case that your family members want to take over the business.
Yeah. Yeah.
So what are you going to do? And so a lot of people, a lot of companies just close. So from a private equity perspective, I spent a career nearly 4 decades originally in sales for tech businesses in the UK and the US, and then marketing, and then inevitably, as an ambitious young guy, you try and get promoted. And I ended up in VP, senior VP positions or CEO positions in mid-sized companies, um, sort of running a European segment or an Asia segment or a global segment if I was a, SVP global or CEO. And in those scenarios, it's quite common that you merge with another business or you get bought by another business or you buy one.
Mm.
And I've done all of those things, but working for other people predominantly for the bigger transactions. And then I made a shift quite by accident. I wasn't looking to necessarily move in that area, but I had a service-based business that was implementing high-value software sales for banks, principal tier 1 banks in most countries outside of North America at that time. And when you're putting in software, you need a lot of people to set it up.
Mm.
But the organization I was working with as a consultant running their sales and marketing operation for Europe and Asia didn't have those. So I boldly said I would set one up. And they said, go ahead. Um, I didn't really, it was one of those where I thought, I'm a great believer in get started and get perfect as you go along. But even then, I bit off a bit more than I could chew because fairly quickly I could find the right people to hire, but I didn't have enough cash for the runway that I needed to get them trained. So I had to go back with the tail between my legs to sort of say, look, this is the right thing to do, but I haven't got enough money to keep these on payroll while the contracts are coming in. So we negotiated a deal where they would support me with that. It would come out of the future royalties that we were going to make. And if I got it wrong, I'd lose the lot, they'd take it over. Bit
Right.
of a Hobson's choice, but it worked.
Mm.
And that was working on the other side of M&A, whereas as an employee, I'd always been involved in due diligence, selecting companies that we were going to buy for the right strategic reasons, but I hadn't been the person that wrote the check, didn't really understand that side of the business. And there I was moving into M&A without any understanding. Um, and by setting up a business, but buying bolt-on technologies to support me in that business, and that business grew quite well. Um, and that led me through the next phase of my career and building that out. I diversified a little bit into property, which I know you have a lot of listeners in that are interested in property. So I was more interested in residential conversions in the UK. So that would be, permitted development, office to res. And those are harder to do now because probably right now, as we stand in 2024, as much of that you could do has probably been done. I don't know, but it's certainly harder. But much more at the smaller end of the scale with smaller projects.
Yeah.
And I did that to diversify away from the risk that I had of being in one line of business. But through that, of course, with property, you never use your own money. It's always other people's money that you're using for the developments. And one day I thought, wouldn't it be great if you could use other people's money to buy companies, thinking that I'd invented that idea and realizing once I started doing it that I was the last person on the planet that had been thinking about that and everybody had done it before me. But great skill to translate back into, what I was doing on the M&A side. Um,
Yeah.
and so we kind of got to a point of having 93, 94 companies in a pipeline that we wanted to do something with. In other words, we wanted to buy, Charles. But the problem was this. Unfortunately, it tends to be the case that with 9 out of 10 companies in that SME space, that small, medium, and size enterprise space, sub 50 million in revenue, come to market and they don't sell within a year. They don't sell within 15 months or 18 months. And what private equity does, which was what I was doing at the time, is they sit and wait for the company to get less expensive.
So they just
Now,
monitor it and watch for it to
well,
change.
they either move on, and,
Okay.
and of course they do move on. They assume that it might come up, but they don't think that it will come up. But because an owner has a choice, they can either delist it from the market for sale and continue to run it, and many do,
Mm.
or they can reduce the price and make it more attractive. It's just like selling a property. If you want to sell your home and you bring the agent in and you go on the market, you tend to go with the highest bidder just to see. And if you've sold the property in 3 days, then you put it on too cheap. If you haven't sold the property in 4 months, you're probably going to reduce the price, maybe, or 6 months, certainly. And that's just how the property industry works. And selling a business is the same. You've got business brokers in many instances that act in the same way and try and seek the instruction for the highest valuation. But often, what an investor will do is look at the income that business is generating, its profit, or income in property terms, if you're doing buy to lets, for example, and try and see if that makes sense from the debt service point of view, and from how long it would take to pay back the amount of money that you're going to spend on buying the business. And if that stacks up, then the business will be sold. But often it doesn't. In 9 out of 10 cases, it doesn't, because principally one of the big reasons might be that it's overvalued in the first instance. There are others, but overvaluation can be a common one. So my 10-year-old son said to me I was trying to explain to him the principles of entrepreneurship because I'd love my kids to run their own businesses, right? And at 10 years old, I'm explaining to him 9 out of 10 companies don't sell. And he asked me why. And so I told him, I said, for the things that we've just discussed, Charles, I said, a lot of the time it's because of that, Thomas. And he said, well, he said, you're working in the wrong space. I said, what do you mean? And he didn't say space. He said, you're working with the wrong group. I said, what do you mean by that? He said, the one company out of 10 that does sell doesn't need your help. It's the 9 out of 10 that do. And I said, well, why do you think that? He said, well, what are their families going to do if their parents aren't here and they haven't sold their business? How are they going to, get on? And it started me thinking, you know,
Mm.
that he was absolutely right. But how would
Very
you do it?
smart.
Because
Yeah.
we were looking at 93 companies that we were doing the PE thing with and waiting. And incidentally, 4 years down the line, most of those companies have been withdrawn or are still on the market, haven't sold. And so they're still trading, but they just haven't sold. And so it began me thinking about what would you do? So what private equity does when it acquires a business is it tries to improve it and add value to it in lots of different ways, growing the sales, reducing the cost base where it makes sense to without harming the business. Maybe making other acquisitions that they would bolt on the side of it. Um, Maybe improving and strengthening the management team and putting systems, processes, and procedures in. All the things that PE would do if you bought a business. I thought, well, all you got to do is bring that forward and work with owners to do this instead of trying to buy the company from them and do it separately so that they benefit from it as well. And over time, you improve the value of the business to get to a point where it is worth what they wanted. So I began to develop a system and a process to do this. And then the next thing that my 10-year-old taught me, who was about 11 and a half by this point, he's 13 now, was you're not helping enough people. And so I said, well, what do you mean by that? He said, it was great for the ones you're working with, but what about all these other companies that you talk about? And so that was the spark to write the book.
Okay.
And so the idea behind the book, Secrets to 10x in Your Business and Cashing Out Tax-Free, is that there are 3 phases to putting as much money in your bank as you possibly can when you're selling a business. One is you've got to grow the value of that business to get to the price point that you want. And so, in rough terms, Charles, if you run a business or own a business that generates less than 1 million in profit, in rough terms, it's going to be worth between 1 and 3 times its profit number.
Yeah, that's
So
the
if
thing.
you're doing
Yeah.
if you're doing 500,000 in profit, you're probably going to be worth somewhere between half and 1.5 million. Now, that changes by industry segment. Some are in vogue, some are not. And so, and some, so the multiples will change as a result of that. But for this conversation, let's keep that 1 to 3. Now, the moment you go over 1 million, reasonably, let's call it 1.2 million, those multiples change. And so instead of being 1 to 3, those multiples become 4, 5, 6, 7, maybe 8. So let's just do the math on that. If you're doing 500,000 and you're worth, let's say, 1 million, 2x, and now you can get it to the 1.2 million. Do you know what? I'm going to make it easy for my head because I'm not very good at maths. Let's say 1.5 million, and you now get a multiple of 5 or 6, then 6 times 1.5 is 9 million. And you've just added 8 million in value to your business by tripling your profits. Now, I can hear the listeners that are either watching or listening to this podcast say, yeah, that's all well and good, Mark, but you've got to go from 500,000 to 1.5 million. And it's not as difficult as you would think.
Well, I can imagine that when I was a business owner with staff and that someone comes in, you got to double your. So I'm working as hard as I can. I can't do any more. I'm 6 days a week, and I think, well, how am I going to do that?
And you're absolutely right. And that is a major issue. So there are 3 core areas that you can begin to think about that might be low-hanging fruit that give you a big lift. The one is, what could you do in your business with staff? And this is a contentious one because, I've got relationships with the people that we employ and I don't want to make any of them redundant. That's the emotional side of it. And most business owners are like that. They're committed and loyal to their staff because they recognize that their people are the business.
Yeah.
But when you are with one of my clients, they have 30 people that are costing them 100,000 a year, but that we were able to move into India and the Philippines at a loaded cost of 25,000 a year with no degradation of the quality of work, which immediately puts a couple of million back on the bottom line. Now,
We're
this is
talking
a
about
slight
profit here, right? We're talking about the
no,
net profit rather than like
yeah. So
increasing
I'm not
sales
talking
or
about
doubling sales. We're talking about doubling the profits, right?
yeah. So I'm talking about one step that you might
Yeah.
take, and that's not profit at this point. It's just a saving that you've made. Now, if you choose to do nothing with it, then it will go on the bottom line as profit.
Right.
But actually, the reason that you might do that, and they did in this particular case, and those numbers are slightly bigger than most people will get, but they then redeploy that cash into hiring salespeople. Now, for a 2 million saving, you've already paid for 5 or 6 salespeople who are going to generate for you 15 to 25 million in revenue in their particular case, but they're going to cost you 10% of that. But that's new. So you've effectively got free growth in that particular example. It's not there for everybody to do it that way, but you might look to see what money you could save. And outsourcing is a key one and an easy one to look at, but you might look at renegotiating your lease contracts on your buildings that you're using, given that most people do a work from home kind of routine and a hot desking kind of routine in many industries now. Maybe that's something that you could, make some savings from.
Yeah,
It doesn't
definitely.
work for everybody, because if you're in the building trade and you're on the tools and you're on site, so that's a different, obviously kettle of fish. But these are just areas to look at, and some of them will be applicable and some of them won't. So in that little piece, we've got some money saved and some revenue made for free in that particular example. But then when you look at other areas that companies might um, um, improve their organic profitability and growth from, it also turns out to be the case that with SME companies, many of them think, not all of them, many of them think that if you have a website, people will come. But they kind of forget the fact that you need to drive traffic to the website to convert. And so a lot of organizations will use it as a brochure. And I can
Yeah.
normally see this fairly quickly when I'm looking at the site to see if there's something as simple as a Facebook pixel there.
Yeah. Yeah.
Because if it's akin to a Facebook kind of market and there's no pixel, then you're leaving maybe 15 or 20% of revenue on the table, because a lot of people will abandon the cart in the sale and not complete. So you go back and retarget them to get them through. And we all experience it, because when we're on Amazon, we get reminders that we did that. And so you go back and you complete the purchase. But lots of smaller companies, don't do that. Now, that's not none of these aren't things that work for everybody. These are things that might work for some companies, but not all of them will work for everybody. So there's those things. Just those 3 things alone could get you a 3 or 4x growth in
Really.
terms of what your profit would be. So how do you get the rest? Well, one of the big areas that SMEs don't necessarily know much about how to do is, how could you double the size of your business in an afternoon? To your point, Charles, when you're saying, I'm already working 6 days a week, well, what am I going to do? I can't do any more. But actually, if it were possible for you to acquire another business of a similar size and profitability,
Wow. That's
you could double the business in an afternoon. And now you've got 2 or 3 extra. If you're, what did we say as our example, 750 in profit?
yeah.
And then so if you've got, a 30% uplift just by doing the first 3 things that we spoke about, what's that take you to? It's almost 1 million there in profit
Just
now.
around
And
that
then if
million.
you're out,
Yeah.
if you're out acquiring another business and you're a profitable business, so you can use some of your EBITDA for the funding, you've almost doubled your business from, say, 900,000 to 1.8 million. And by the way, we were only looking for 1.5 million in my example, just with those 3 things, right? Now, you
Yeah.
won't necessarily get the growth figure that I said. You won't necessarily get the savings that I outlined. You won't necessarily get to 900 in EBITDA. Maybe you only get to 750 in EBITDA or whatever it is. But your 750 with an acquisition that you can make strategically to double the size of the business does get you there. And now maybe you're selling into a market you didn't have access before because you're cross-selling, and they're doing the same into your market, into your customer base as well. Or maybe you've taken out a competitor and got some economies of scale, and
Yeah.
maybe you can now negotiate for bigger contracts because you're a much bigger organization than you were able to before. Lots of things start happening for you that you didn't have at the time. But principally, you're now at 1.5 million in EBITDA, and now you're at sort of 7 to 9 million in value, whereas before you were struggling to get to 1.2, 1.3 in valuation. And that's with organic growth with an acquisition. That's organic growth with an acquisition. So even if that's all you did, let's not focus on systems, processes, procedures, and all those things just for this chat. Then, and you were in a position where you sold that business for 9 million. So one of my clients does 18 million top line, and they've gone from 1.5 to 2.8 million in bottom line in terms of EBIT. And they're going through the final process now of selling out the business, and they're going to sell that business out for somewhere around 22, 23 million. Because
Well, that's really
at 2
good.
point, 2.8 million rounded up to 3 times a 6 multiple gives them 20, 3 sixes or 18 times a 7 multiple is, is it's just ridiculous, in terms of
Yeah.
18 to 21. The difference it's made going from a 1.8 to 2 1.5 to 2.8.
And you
But
did you
that's
help them get to that extra turnover, the extra profit to be able to sell this? Because before you come along,
yes.
they would have maybe got, 3 times 500,000 or something.
No, so they would have got more because they were already over a million.
Okay.
Um, so the negotiation for the deal they've done themselves, but some of the things that they can do to get there, yes, we've helped them with that, but not all of the things. Some of them they were doing, but certainly it had, adds a significant lift. So once you've done that piece, the next piece is how do you get out of that business without having to pay tax? Now, we probably haven't got enough time to go into all the nuances of that today, but it's different in the US to the UK.
Yeah.
And I know it works in those two countries because I'm doing it. I think it works in other countries, but I haven't proved it in other
Mhm.
countries. But essentially, one of the things, and so if you follow the process that we would outline, you can come out of the business not paying any tax at all. So then but if you were going to pay tax at the normal rates, maybe you're somewhere between 20 and 33 points in tax, depending on whether you're in the US or whether you're in the UK, and your own personal position. But you've, but not everybody, you've got to then look at it and say, can you follow the steps that we would outline? Because some people are looking to sell a business, not because they want to retire, but sadly they've got maybe they've got a health problem, which means that they may not be here. I myself, in 2020 going into 2021, was in a position where at that time I'd been diagnosed with stage 4 cancer, and it was I was in a position where unfortunately I had between 6 months and 2 years to live.
Wow.
Now I'm absolutely delighted to be here sharing this story with you today, for, sort of nearly 3 years on, nearly 4 years on, because I managed to beat it.
Wow.
But at that point in my own business, it was a case of how do I sell it and get the most for it, pay the least tax, and how do I look after my loved ones? So I've been through this headache and nightmare for myself, which puts me in a good position to think about starting with the end in mind and thinking about other people who won't be going through what I went through, and God forbid that they ever do.
Yeah.
So when you're in that scenario, you're going to be looking at all sorts of ways in which you could take advantage of tax programs, if you can, that will minimize the amount of tax that you will have to pay. Now, if you follow the system that we would outline, it will bring the tax down to zero, but that system might not work for everybody. So we'll still bring the tax down significantly to a much smaller amount than you would be paying than if you did it on your own. So now you've got two bits to 10xing and cashing out tax free. Incidentally, when I wrote the book on this, um, it was published on Amazon and Kindle and Audible, and then after about a couple of months, they banned it on Amazon.
Really?
Yeah,
Found
I
it.
was like, yeah, exactly. So I obviously they sent me the notification and said, Mark, we're really sorry, but they didn't say Mark, they said Mr. Adams in an email. We're withdrawing your book from the market immediately in an American accent. So I
Wow.
went back and said, why was that? And they said, well, you're in breach of the T's and C's. So I read the T's and C's, and we weren't in breach. And so I went back and said, look, please help me because I'm going to be writing more books and I want to make sure I get this right. It's, I'm not the kind of person that would breach T's and C's, but I don't know what I've done. And there wasn't really a response for another month. So I went back to them then and said, look, just to follow up on this, I know that, you're keen to have authors publishing as much as you can. And I am a small author for sure, but I've been thinking about this and I'm just wondering whether you felt that the title was a problem in the cashing out tax-free piece. I said, if it was, then I just wanted to point out that all I'm doing is making the secrets that the rich use, like Jeff Bezos, like Elon Musk, and others, in terms of how they minimize their tax positions with the companies that they run, which are incidentally um, exponentially bigger than any of the businesses I'm working with. They're in the billions of valuations, and I'm talking millions in turnovers here.
Yeah.
And I'm just making those same secrets available to everyone else. Because if you have a reasonable business, you too can do the things that the uber rich are doing, um, and put yourself in the same position where your tax is absolutely minimized. So that went by for another 10 days. And then all of a sudden I got a note to say, we're going to relist your book, but with no explanation. So I've got to tell you that I maybe think it had something to do with it because you wouldn't want to put anything out there that was contentious. But I can't say that was the reason. I'm glad it's been relisted, and I didn't get an official reason as to why at the end of the day that it was taken off in the first place. But it's the only thing I can think of. So my next marketing for the book, if I ever did it, would be secrets to why Jeff Bezos banned my book that you need to know about, but he's doing, or something like that.
Yeah, he complained
But
about Marc Adams. He didn't like what Marc Adams was saying.
yeah, no, I don't know what it was, but
Yeah.
it's the only thing I could think of. But you've got that piece to consider, and then there's the final piece of this system, which is you've got all the money out, and as your legacy, you'll probably want to pass that on to your loved ones, and so you might leave some of it to your kids. So now imagine a few years down the line, if they've been left a few million, which is fabulous, it's a great thing to be in a position to have that, very lucky, but they might get married and make a bad choice.
Mm.
And so, in the event of a divorce, half of what you worked through your life, and it's a really shitty example, I apologize for using it, but it makes the point. But half of what your legacy is walked out the door in the divorce
It
settlement.
happens, yeah.
So, there's tips and tricks on what you might do to try and protect those kinds of things as well. Now, there's nothing new or earth-shattering in here that people probably don't won't be able to come across themselves. All I've done here is take all this stuff, which is available in terms of sales growth, which is available in terms of maybe tax advice, if that's a strategy, but there are others, which is available in terms of legacy planning, which is available in terms of how you buy other businesses, or all of those things. And they're just all brought together in a single skill stack. That not many people are talking about. Lots of people will help you grow a business. Lots of people will help you prepare for an exit, but they won't be thinking about the end in mind as to how you come out with it with as much money as you can. It's not difficult to do. You just need somebody to show you the way. So we work with businesses that do 3 million or more in revenue to help them do this as a done with you service. But we can't work with everybody. So coming back to my son, and how do I help these other people? That's why I wrote the book, because through the book, most people could implement some of these things themselves and do it themselves. They'll need to get some advice along the way, but they would certainly be going in the right direction. Um, and that's the reason for the book, is to try and help as many people as we possibly can that we're never going to meet or see. And thus
So you help
far,
the ones you do work with, you help them implement it and put it together. So you're probably working with them for several months, are you? And
it it changes. Yeah. So this process will take a couple of years because
couple of years.
there are other things that you need to do. So if you're going to sell a business, um, and you are the only person in the business, it's pretty unsellable,
Yeah.
because when you sell the business, you're going to be walking away as the owner, and no investor really wants to buy that. So that's a very difficult sale. So what you tend to see in a business that's doing 5 million or more in revenue is they've got systems and processes in place, and they've got a second tier management team in place. So you've got to start working on making sure that the systems, processes, procedures are robust, and positioning the owners to a point where they're actually not involved in the business very much, if at all, in anything other than a strategic capacity.
Okay.
Because an investor will see that that owner has actually stepped away, and you've got a robust leadership team in there, and it will give them confidence that there's less risk in the business in buying that business. Because the worst thing you can do is buy a business and the owner in a one-man band kind of business or is walked out of the door with all the knowledge, and you've basically been left with a very, very big risk, because all the know-how and how to run the business and what they do has
Yeah.
walked out the door. So
Yeah.
that's why for a lot of companies this can take a bit of time, because you will find a lot of companies work and run on a. Or the other thing that happens a lot is when you've been running a business for quite some time, and I'm speaking to those that might be retiring here, not the young 30 somethings that are coming through, for example. There are different reasons why they want to step out, which we can get onto in a moment. Then you tend to run it based on, you've got so much experience in doing it that all the operating procedures can be in your head. The ways in which you work with your customers and attract new business are in your head. A lot of them don't even do any marketing. It's all on referral. And
Yeah.
so it becomes a lifestyle business, but a very good business. So often the journey is, I could get somebody out of a business in a couple of months, but to get them to 10x and get them out tax free, there's some steps that you need to go through in positioning, which means it's going to be 6 months to 2.5 years, maybe 3 years. And typically it's going to be 18 months, maybe 18 months to 2 years to go through that process, so that you make it really attractive and valuable to the person that's going to buy that business. What I try and do is persuade the owners to get it ready for sale, but not step away completely. Because if I can position it to help them sell it at 10x the value, and maybe they take 7x off the table now because they keep 30% on a rollover, investors will love that. But the investor that's coming in will then take on the reins to buy other companies to bolt on to grow a much bigger group through 5 companies that they've bought and then sell maybe 3 years later. And then that owner gets a second bite of the cherry with that 30% stake they've had that's rolled over into the new company, into the investors that bought them, which can often be worth the same amount of money that they're taking when they originally sell the company, if not a lot more, Charles.
That's
But it
amazing.
really comes, there's no one size that fits all because
No.
everybody's circumstances are very different. But the purpose of the book was to help people do it themselves. And so far, I've been lucky to have some pretty decent reviews from people that are saying it's helping them, which is great. It's what it was designed to do.
Great. And where do these investors typically come from? And who are they investors purely that just want to get a return on their money, or are they companies in the similar market and they just want to acquire more businesses? And you said investors. I think of it as an
Yeah.
investor as someone who just puts their money in and takes the dividends and profits.
Yeah, that's a really good question. And so it's all of the above that you mentioned. So in line with those valuation multiples, let's bucket the kinds of people that would be interested in. So if you want to 10, if you're in that 750 EBITDA range now,
Mm.
and you want to get to a 1.5 because it's going to mean that your value will be 9 million instead of 1 million, then you're going to be selling to what I would call a trade buyer. That's another company that might already be in the industry, but bigger than you, or might already be in the industry, but in an adjacent market to you.
Right. That makes
Right.
sense.
So most likely some kind of trade buy. So I do all of this positioning when I'm working with people as to who they might likely be to start with, because actually we'll go out, we're not brokers, but we'll go out and quietly approach the right kinds of companies on the basis that
Okay.
the business is not for sale. The thing about when you go on the market to sell a business is the first thing that people think is that there's something wrong and you're selling the business and they're going to get it cheap. That's not often the case,
Why are they
but
selling? If it's so good, why are they selling? That's
yeah, totally right. So you get that mindset all the time. So when you're preparing a business so that the numbers look attractive, and the right things, systems, processes, people, culture, leadership team, and branding are in place, then very quickly that myth gets dispelled. So when you're approaching somebody from this business is not for sale, but with the right conversation, it might be a conversation to have for the future to a potential buyer stroke investor, it immediately increases the value of the business that is going to be sold because there's scarcity that's introduced in a way that you can't do that yourself and you can't do it through a broker.
Yeah, sorry, I
And
just want to say, I know some of these brokers, and what they seem to do is list a load of businesses. You see in an ad in the Sunday papers, all these businesses, and it's the same businesses all the time. They don't do
yeah,
anything else,
no,
and they promise the business owner that they can get millions for it. And then
yeah,
when it sells for like 50,000, they still want their fallback of commission. They're just
yeah,
waiting so they're looking on Companies House to see if that business has been sold. So I
yeah,
don't think a lot of them offer a very good service in terms of what you're saying, approaching competitors and trade buyers, so
yeah, they don't, Charles. But so let me so this is a UK stroke US and from where I've seen in other countries, a similar thing everywhere. Now, there are some very good brokers.
okay.
They tend to be more boutiquey, but there are some really good brokers. And part of a broker's job is to vet the buyers to make sure they're not tire kickers too, because you get a lot of that. So
Hmm.
brokers absolutely in many ways add a lot of value, but they don't necessarily, to your point, do as much on the marketing side as they potentially could. They will list and put it on the website, but all these extra things in helping the business prepare, some of them might do by way of introducing PDF documents and things like that. But actually, as a done with you service, it's not the business they're in.
No,
But but many brokers are also that there are, as I say, I want to say again, there are some good brokers out there for sure, but there are some brokers that have got a lot of inexperienced young people in there that are maybe more of the kind of person that you would be used to seeing in an estate agency
I was just thinking
who
that young estate agent.
and so they're relationship driven and they build a good relationship with the client, but they get you listed and they will promise you everything
Hmm.
without the knowledge of how they're going to deliver it. Now, it's a bit difficult for a broker too, because if they look at a company that's not necessarily performing as it should, but they know that the right strategic buyer might pay a premium for it for whatever reason, they'll chance their arm, just like an estate agent would. But the reality, as you have seen, is the same businesses are listed week in, week out, month in, month out. And after a year or so, the acid test, sadly, is in the US and the UK, it tends to be 9 out of 10 companies that come to market haven't sold in that SME space. And that again is up to 50 million for this conversation. It's up to
Yeah,
50 million.
yeah.
And so what does that do? It means that the owners of the business have still got bills to pay. And as a lifestyle business, it's still generating the cash to pay the bills, but it's not put them in a position where they can retire or cash out because they've not got the seller, they haven't got a buyer for it. So that's where looking at what do you do to make this business as appealing as you can. And this book would help some people. And this is a real low cost thing. It's like
Yeah, I think
$6 or £6.
well, yeah,
Would help people start down that journey. And then if they wanted to chat more, not necessarily work with us, but I'm always available to talk to people to give them tips, tricks, and pointers. If it helps them, happy to do that. I do a lot of it already, but that doesn't mean we're going to work with them necessarily. But that's to your point. A lot of the challenges is to basically taking listing fees and not selling the business. In fact, they run the business, it looks like, on the listing fee, not necessarily on the basis that they plan in the commissions that they're going to get for the sale of the business. It appears that in some instances to me that that's exactly what happens. But I do want to say one last time, there are some good brokers out there.
yeah.
And so these comments I'm making are not aimed to those decent brokers at all. They're but the majority are not.
But when you say lifestyle businesses, I mean, there are businesses that their lifestyle, maybe it's two directors and they're drawing out the maximum salary. So they're not really generating the profits there to make it worthwhile selling, because they're ripping out everything out. They've got company cars, they've got the maximum salaries, they're putting all their money into pensions and that sort of thing. So they're almost taking the cream out of the business, not leaving anything for anything else. Do you come across that situation where
Yeah,
and
I
his
do a
family
lot.
members, his wife's on the payroll, his son's on the payroll, and they're just ripping everything out of the business?
You do. You see it all the time. Now but their mindset and what they're trying to do in many instances is different. They're not thinking that they're necessarily going to sell that business.
Yeah.
They're ripping everything out to put it into pensions and everything else. I'm planning on leaving the business and maybe not selling it at all.
Yeah.
So in that scenario, that strategy works. If you wanted a compelling capital event, you'd build the business in a really different way. So one of the biggest changes that I see that's hard to get across is you will walk into really good businesses. So give you an example. 15 million in top line, 2.2 million in EBITDA, and they're taking 500,000 each in a dividend. So that's after the EBITDA, they're still taking 500,000 each. And the business is doing that every year. So at that level, they're having a fabulous lifestyle and they're taking decent dividends out in terms of, that's what I would call a really good business run kind of lifestyle-ish, because they're taking 500,000 each. I'm thinking in your particular example of two directors, but you've got to be able to say, they've worked really hard to get to that. This is a 20-year-old plus business, and why shouldn't they be doing that? I would want to. Now, when they come to sell the business, it may not be detrimental in that particular case because they've got an expense line in the business, and it's a proper expense line because HMRC will be all over it like a rash. So with the IRS in North America, because when you sell a business, it's not like submitting a tax return where it's just automated and done on computers. When you sell a business, it triggers a manual process to have a look at it. So if it's not in line and there's some unusual things in there, then the government in the US or the HMRC in the UK are going to come looking at it. So they're running their businesses properly. But if you've been running it too much as a lifestyle and putting too many expenses through, that's to your detriment if you do want to sell it and you go through a process of adjusting that to take those expenses out and you run them through the business properly. We know what we're talking about, but I'm not speaking particular examples here. So that when it does present for sale, yes, it's maybe making a slightly lower profit at the moment, but that can be reflected in the EBITDA because you'll have the true EBITDA of the business, but then you'll have what we call adjustments, which is I took 500,000 dividend out of the business, and if I'm not involved in the business going forward, then of course that will still be in the business. And you add that back onto the profit. And that going back onto the profit helps you in the multiple. So there are some legitimate things that you can do, and there are some stupid things that people do. In America, I've been working with a company that likes to take the whole family to conferences, which cost 30 or 40 grand, and they run that through the business as an expense, and then they wonder why they get a lower valuation when they come to sell the company. And they'll try and say, but the value of the business is this, but I can't go and get that in the market because I'm going to trigger an IRS investigation, which which if the IRS look at it, will mean they have to pay it back, and they'll get spanked for in terms of a fine for not doing it properly in the first instance. So this is why it takes a little bit of time to make sure you're positioning and adjusting your financial reporting. And those are just simple things. You've got to look at the balance sheet and make sure that's, there's lots of instances where the balance sheet isn't properly represented. But all of these things can easily be put right so that you can maximize your valuation and cash out, and not have to pay any tax or pay very little tax. We're pretty good at helping people do that. But this book will give people a direction on how to do it.
Yeah, I think your service sounds great. I mean, what type of businesses are you looking for typically? I mean, are you particular areas you look at, particular niches, or?
Yeah, so what we do doesn't work for everybody, but the only criteria that we have if we're doing a done with. So I want to hesitate before saying this because I didn't come here to sell my services. I came here to help other people with a book.
Okay.
But to answer the question, we tend to work with companies that are doing at least 3 million in top line. We don't say in this industry or this industry, because every single scenario is different.
Okay.
So now there are many scenarios where we can't help as much. We can't meet the promise of 10x tax free. In the way that we work, when we're working with a client, the way that we get paid is we do have a monthly fee. Of course, we've got bills to pay like anyone else. At the end of the process, when the business is sold, we take a percentage of the difference that we've made.
Okay.
And then we refund the monthly fees against that difference.
Okay.
So the owner effectively gets out tax free. Sorry, the owner effectively doesn't have to pay us at all. They do, but they get it back. And then in some scenarios, we're even able to construct this in a way that the amount of money that they would be paying us, we can structure that so they're paying it to us over a period of time, so that they get more money when the business closes as a lump sum, but we're quite happy to take it over a period of time on a monthly invoicing or something like that, because you can do it differently through the company and it's better for them. But that's a different conversation to have. That's one that you have when you're getting towards we're ready to sell this now. But we try and make sure that we're cash neutral. We do very well from this when we're working with clients, but we deliver results. And so we're delivering results that they would not have seen that are life-changing for them. That's the key thing. But that's not the reason for our chat. The reason for our chat is I can't help everybody. No one's really talking about this as a stacked solution, taking into account the 3 pillars. How do you make the value? How do you exit and not have to pay tax on the value or very little amount of tax on the value? And then how do you keep all that value? And those are things that that we focus on a lot. And by the way, I'm not a financial advisor, so when it comes to that last piece, we bring in the experts that you need to do that piece, because to be an IFA to help you see how you should structure the money you've now got to keep it, you want the proper advice. But we've got all of that stuff, and we just bring those people in to help at that time.
Okay, so they can find your book on Amazon. Obviously, it's still there.
It's relisted. It's now it's relisted, doing well. It's got popular reviews. So it's on Amazon.
Social media? You're on any other social media channels, podcasts, or anything like that? Or
or in fact, anybody that would be interested in the book on your show, that drops me an email within a week of you going live with it, I'll send them a copy of the book free of charge. Now, I hesitate to say that because I made this offer on another podcast, and the first person that came in was in Sydney. So it would have been cheaper for me to gift them the book from Amazon. But so I'm quite happy to do that for people if they don't want to go onto Amazon and get it, and if they're really just getting started, and and £6 or $6 is a challenge or something like that. I think it's maybe £7.95 or something like that. I'm quite happy to send out a copy to people for free, but they need to come through and email me at marc@acquisitionsforyou.com, they need to reference your show, Charles, and that they listen to your podcast, and then I'll pick it up and get it mailed out to them.
Great. Well, I can put that in the description then, so they can just click on that, and probably they can find you at that website if they want to know more about you.
Yeah, so they can go to the company, or I'm on all the socials, so they'll find my YouTube channel. LinkedIn is I'm quite active on LinkedIn, but certainly YouTube, Insta, Facebook. What I can do, Charles, is send you, if you want to put it in the show notes, all of those details so people
Yes,
can see
please
it if they
do.
want it.
Yeah.
Yeah, I will
Yeah.
do. But it's not that this book, it's a quick read. It's 140 pages. There's a lot of stuff I didn't put in the book. There's nothing on artificial intelligence.
Okay.
There is a bit on branding. I tend to find that people of my age are P&L and balance sheet savvy, but we may not be as branding savvy as anybody of 30 years old and younger is.
Okay.
So that they understand brand really, really well. Brand is really important these days because you look at companies like Apple and you think of Tim Cook, personal branding. And you think of Tesla, you think of Elon Musk, or you think of Elon Musk more likely, and you think of Tesla. You think of Facebook, you think of Mark Zuckerberg, you think of Amazon, you think of Jeff Bezos. So for smaller companies too, within their sphere, personal branding is becoming increasingly important and adds value to the company as well. This is in the book, but we didn't talk about it today. But artificial intelligence absolutely impact all of this. We haven't discussed anything on AI in the book at all. So that will be part of what I do in the next book that comes out.
Great. Great. I mean, certainly branding makes a huge difference. I mean, you've got big brands out there like Coca-Cola that are just the brand alone is worth billions. So
Totally right.
yeah, I think it's important. So AI's changed so much in the last year. I'm not surprised that you haven't got that in because things have changed so much. But certainly, there sounds like a lot you can do from it. And there's a lot in that book. I mean, you mentioned early on sales, for instance, that perhaps they're not concentrating enough on sales. They're paying all their money out to admin staff, but have neglected the sales. So just by saving the money on admin, you can get the sales up and increase the revenue.
Yeah, there are a couple of schools of thought on sales. So if you are Stephen Barclay, and in the digital world that he's in, they did away with sales completely and just did everything through online. It worked really well for them. But actually, many of us are not in that space. My career when I was selling was in high value consulting and solution sales. So your relationship with
Yeah.
the organ, between the supplier and the customer through the salespeople is paramount for sure.
Yeah, that
We still
explains
need
it
them.
down. Yeah. Yeah.
Yeah, there are many industries and many verticals where salespeople are never going away. They're very, very important. But their value has been diminished a little bit in recent years because of the advent of digital, and the balance is beginning to come back now. There was a big push towards the marketing side, and we don't need them anymore, kind of thing. And it's redressing the balance now, where the value of good salespeople is worth their weight in gold. And we do talk about that in the book.
Yeah, I think you can sell a low ticket product on a website and people just buy it. But if you're
Yeah,
talking about 10, 20,000, or even 3 or 4,000, you generally need to get someone on the phone at least or go and see
yeah,
them.
yeah.
And you might not call them sales, you might call them a consultant or I'm here to help you, advise you, and that sort of thing. But it's still sales. And I think we'll always need, because you're selling to people, you're not selling to a
No,
machine.
I agree with you, and I've got a
You need,
six-step process that
yeah,
kind of helps in that regard, and it's one I've always used in a selling environment, and it was taught to me, oh God, a million years ago. And that six-step process is timescale, authority, budget, need, solution, and competition. And very, very quickly, the need and solution piece is something I always started with first. So, what is it that the customer is experiencing that's causing them significant pain? That is causing that need, being the pain, that your potential solution will help resolve. You've got to spend some time figuring those two pieces out first in high ticket sales, in high value sales. So need and solution. And then as you start to see from the need that you can meet that need with your solution, you begin working on timescale, authority, and budget. Now, the authority is sometimes it's multiple authorities. It could be somebody that's going to recommend this works, but it's also somebody that's going to sign that check. In my case, when I was doing M&A as a WT or a PAYE employee, I did a lot of the technical due diligence and commercial due diligence, but I didn't sign the check. So I was an authority on the recommendation side, but I didn't write the number, didn't write the check at the end of the day. These values were quite high. It came from the FD of the division. So that's where you start working on your authorities and the time scale. When is it that they think they're going to buy? And often they might want to buy at the end of the year, which is too late for you because you want it for this quarter's number. So if you can find that out, you start engineering back from the end to now the reasons why, if they wanted to buy at the end of the year because they wanted it up and running, they'd need to do it in July to give you time to get it in there, set it up, train people, and get it all sorted out. In this example, right? So you can walk it back as to when they need to sign. So that's your time scale and your authority. And of course, you need to know where the budget's coming from. And that's an interesting one because it ties into competition, because competition is not just who else is going to sell that solution in for you. It can also be what else is competing for that budget. So I famously lost a deal in Asia to forklift trucks because it was a 5 million purchase that they absolutely needed, in this case, from a regulatory point of view. And I knew that we'd won it because I'd done all that timescale, authority, budget, need, solution. I'd missed one aspect of the competition, which was they were going to spend it on this now or forklift trucks now. And forklift trucks put product on pallet that shipped to customers that generated revenue, and it won. And even if I'd known it, it was going to win. But what it cost me was 3 months because I had to go back and figure out how they were going to finance it out of their operating income as opposed to their capital expenditure, which if I've done my job properly in the first place, I could have set all that up so that they could have done both at the same time. So I got a spanking for not predicting at the right time, but the deal came in anyway. But I was lucky. But that's where that 6-step process really helps. And you grade them 1 to 3. So if you're grading it 0 to 3, or you can go -3 to +3 if you want. So if you don't know where your budget is, you start at -3. But if you do know your time scale and your authority and your need and solution, you're grading those at 2s and 3s, you know that anyone else looking at that graph is going to go, we're -3 on a budget. We need to put a lot of effort into making sure we know where that's coming from. So it's a nice little way for salespeople to communicate with sales leadership in a company to get those pieces right. I don't go into that system in the book, to be fair. Maybe I should do a separate one for that. But it's, works in high value selling. Not sure that it works in quite the same way for low value sales on the internet. But there's other systems around if you don't like that one.
Yeah. Okay. I think we've covered quite a lot there, and I think definitely if you're in business, you should go and get this book. I mean, it's a no-brainer, really. You can 140 pages, you can take in a lot from that. But if you need Mark's help to go further, then you've got a done with you service. Is there anything else you wanted to add, Mark, before we wrap up? I mean,
no, it's on Audible as well. And so, I personally get through a lot of books because I do them from an Audible point of view that rather than reading first. So you can grab it on that. It's on Kindle if people want it from there. It's getting some industry plaudit reviews. So people in M&A have been picking this up and going, this makes an awful lot of sense. Why wasn't this there before? So I'm absolutely humbled and beyond grateful for that, for sure. But it's just that I just hope it helps people. I just hope that it helps. And evidence is so far that it is. And if people want to reach out to me, then they'll be able to do that through your show notes. I'll send you all the details. And again, if anybody within a week, if you're going live, wants a copy and they don't want to buy it, send me a note. I'll send them a copy for free.
Fantastic. Mark, I think that's really good. Very, very interesting. When you're talking about business, it resonated with me what was going through my mind when we were growing a business and then trying to sell it, and all these things went through my mind, so yeah. And I probably was that guy. So I can't do any more than this, but anyway, that was
it's a lonely place running a company, and most business owners that I've had the privilege of meeting are brilliant at doing the thing. But when you go left and right of the thing, like you want to buy another company to double the size of a business, or we want to think about selling it, how do we do that without underpay tax? That's not what they do in the thing every day that's driven that business to where it is. And that's why so much money gets left on the table and always will. I'll be doing this for another 30 years because it isn't going to change. But I just want to help as many people as I can get as much cash out as they possibly can. The more in their bank and the less in the taxman's pockets, the better off everyone's going to be and the happier we'll all be, right?
Yeah, I mean, you mentioned about buying a business with other people's money. I mean, I see a lot of ads for people saying you could buy a company using other people's money or using their money. Is it possible to acquire a business
Yeah.
using the cash in the business, almost like a leverage buyout in some ways. Is it possible to do?
Yeah. Yeah. So I do a lot of LBO work, and it's by far my preferred strategy for sure. But there are lots of sources of cash. Now, just to be clear, if you're an investor and you want to buy into a business and you want to get, let's say, high street cash, mainstream lending to do that, it's not that easy to do. You can do it, but they will want to see you contribute personally, maybe up to 30% of that,
Okay.
because it's a management buy in. But
Right.
if you're doing what I do, consulting for equity, and you're on the inside working for a client, there's no reason why I can't be the preferred buyer for the business. Because if I'm helping them get the best result they possibly can for it and come out of it tax-free, it could well be me that buys it at that higher valuation because I've bought a business which is really, really running well because I've been working with the owner to get it into that position. But when I'm doing that 18 months later or 2 years later, I'm then seen as part of the leadership team and on the inside, and it's a management buyout. And the funding for that's a lot, it's easier for the funding for that. You can do both, but it's easier for the funding for that. Now that's mainstream lending, but don't forget you've got VC, you've got private equity, and I work a lot with ultra high net worth individuals. And I've also started working recently with a couple of groups that do the raise cash on the exchanges like the LSE. That's really exciting. But lenders are looking for growth. I'm sorry, investors are looking for growth and low risk. So all we're doing here is preparing good businesses to be low risk, to get the owners what they want, and then take it forward to the next level and add more companies around it. But you've got to protect legacy, people, and culture. The most important asset in a business is the people. So in whatever you do, those soft skills, which we've not talked about today, is look after the people and don't walk in there on like a knight in shining armor and rip everything apart saying we're doing this, this, and this, because you'll destroy the business very, very quickly. Most private equity, when it buys a company, doesn't do anything with it in the first year. They just let it run. And then if they've got sense, they'll work with the leadership team to figure out how they can take these next steps to facilitate change and growth and improve things. But they work on the culture and the people first, because they all know that if they lose the people, then they've made a shit investment. In many instances, that's not always the case. I am being general, but it works a lot of the time.
Yeah, yeah. Okay, well, I think that's great, Mark. Fantastic. Really very, very interesting. And as I said, you can get Mark's book, which is called, what's your book called?
Secrets to 10x in your business and cashing out tax-free. By yours truly, Marc Adams.
Tax-free, yes.
Yeah.
Okay. Thanks very much. And
Charles,
thanks for
thank you
joining
for
me.
having me.
And I'll put all your details up so that people can get hold of you, Mark. Thanks very much.
Thank you so much for having me. It's been a delight to be
I'm
here.
really interested in all this stuff. It's really fantastic. Thank you.
Cheers. Talk to you soon.